Hey everyone, hope you're doing well. My name is Saimah and welcome to Saimah's Experience. In this video, I'm going to go over Turo taxes and some of the top deductions you can take as an independent contractor, meaning if you received a 1099 and even if you didn't, you still qualify for these types of deductions when you are involved in peer-to-peer car sharing, aka Turo. So I'll be breaking all of that down. Now, real quick, I am of course not a CPA or an accountant, so I'm just sharing some information from my own experience, but you always want to consult a tax professional when it comes to your taxes and make sure that they guide you through the process of figuring out exactly which deductions you can take based on your business activities. Now, a tax deduction is here to help you reduce your taxable income. And that's why you really want to be educated on what those deductions are so that throughout the year you can track them properly, expense them properly, and then reap the rewards of doing so when it comes to tax time, reduce your taxable income, and then pay what you fairly owe. So this is extremely important. Now, when you're involved in peer-to-peer car sharing, that by default makes you a small business owner because you need to report taxes as a 1099 independent contractor. In other words, technically like a small business owner. And with that said, many people have been asking, for those of you that are new to the Turo platform, what should you be looking out for? Now, about a month ago, you should have received an email from Turo letting you know that your 1099 is available under your host hub when you log in to your Turo account. So when you log into your Turo account, if you select the host option at the top, it's going to give you a drop down, and then there is going to be a tab for tax information, and this is where you will find that. Now, some of you reached out to me letting me know that you did not receive a 1099. Now, don't worry, because the only reason why you didn't receive a 1099 is if you made $20,000 or less. So Turo will only issue a 1099 if you made $20,000 or more. But that does not mean that you do not have to pay taxes or that that income is not being reported to the IRS, because it most definitely is. It's just that the IRS requires payees to file 1099s if the payouts are above $20,000. So they technically don't have to do it if it's below $20,000. Now, if you did not receive a 1099, once again, you go to your host hub, select tax information, and Turo is going to present you with an earnings breakdown. So it's going to show you your gross earnings, so what you brought in total, minus any fees that Turo took out, so basically their cut of the business, and then that's going to give you your net earnings at the bottom, so you'll know exactly what you took in. So you can do something as simple as take a screenshot of that, send it over to your accountant, jot it down on a spreadsheet. Just make sure that the numbers match up to what you are seeing under that host hub. So you want to either look out for your 1099 or you want to look out for that breakdown under the host hub. Now, when it comes to peer-to-peer car sharing, you are allowed to take deductions for most expenses related to your vehicle, right? As long as, of course, it was being used for the business. Now, before I go into those deductions, one thing to note that's extremely important, and I'm really lucky to have learned this from my mentors when I was young, is that you want to make sure throughout the year you are always separating your personal expenses from expenses related to the business, right? You have to create a clear separation, and you should really be operating under a business and a business bank account so that the money that you get from your Turo business goes to your business bank account, and any expenses related to the vehicle while it's being used for your Turo business goes out from the business bank account, and that's going to make your accounting much easier. Oftentimes people really mix up their personal checking accounts and their savings accounts and using those funds for business reasons. Well, that makes it extremely hard to take the deductions that you should take, and you'll end up paying more in taxes if it's not clear cut, because it just gets too murky and it is a practice that is frowned upon. So separation is extremely important important, and you want to make sure that you create that for your business. Now, let's say you did this right. You created that separation. What are some of the deductions that you can take? So here are some of the top deductions that I've jotted down for you guys. Many of these I take, but again, you always want to consult with a tax professional. Just make sure that everything is kosher and it makes sense for the way that your money was going in and going out as it is related to your Turo or car sharing business. So common costs that we see take place all the time include gas. We know that we're always filling up for gas, maintenance and repairs all the time, oil changes, brakes, tires. These are all extremely common, especially when it comes to Turo. I know one of the things that I do frequently are bumper repairs and rim repairs. So make sure you're saving all your receipts and documentation on that stuff. And again, that you're expensing that out of your business account so you can separate it from personal utilization. Car washes, we do this all the time, a million times throughout the years. That's a deduction you can take. Lease payments, interest payments on car payments, warranties, service plans, insurance. Let's say you're utilizing a parking space that you pay for on a monthly basis. I know many hosts do that. That's a deduction as well. Roadside assistance. I know I carry my own roadside assistance plan for my car. I go through Haggerty's. That's a deduction as well because I do use that throughout the year if my cars ever need a tow while they're out on rentals. And then anything that you utilize to set up the business as well. So if you purchase trackers, any equipment for your cars, anything that you added onto your vehicles, those are all deductions as well. But again, the most important thing being that you make sure that you please document and track all of this stuff throughout the year so that the proof is there and then you can expense all of that stuff and take those deductions, reduce that taxable income and pay the amount that you should. So extremely important, keep track of your tolls, any parking fees, anything that's related again to those Turo rental costs. You want to track all of that so you can take those deductions. So very important. If you set up your entity for the first time, if you got a lawyer to help you out with any agreements or partnership agreements, maybe you partnered up with other hosts, those are also part of startup costs, business costs that you can utilize as expenses. So definitely jot these down because it is extremely important. Now, when you're calculating your car sharing expenses, as I mentioned earlier, it is extremely important that you differentiate clearly between personal utilization and then business utilization. Let's say you rent your car out on Turo and it goes out for half the year. So you can deduct 50% of your total expense, but you can deduct 100% of the expense related to the car sharing business, to your Turo business. So it's very, very important that you separate the two. Now, if you are tracking mileage and things like that, you want to make sure that you're using a system such as Metro Mile and you're differentiating between your personal utilization and your business utilization. Just like you guys on the off days, if I need to go run errands, I do drive my Turo cars. It's not a ton, but I do utilize my Turo cars. So you got to make sure that you really separate that and account for that time for personal utilization. Now, another common deduction that a lot of people ask me about too, that just came to my mind, is depreciation, right? Depreciation can also be a deduction, but it's one of those things that is extremely complicated to calculate. I myself have no clue how to do it, so I always just revert back to my CPA and I let him handle the whole thing. I let him know how much the car was utilized and then he figures the rest out. So that's another one that people commonly inquire about, and that's one that you want to take up with your accountant and they will definitely help you through it. Now, one interesting thing about being a Turo host is that we have the physical side of the business, right? Actually running the cars going out on rentals, having maintenance, and all the costs related to the physical vehicles. However, we are also in the business of listing management, right? So we maintain our Turo listings, which is online, on the web, and we put time and effort into adjusting those listings, adjusting our price points, photos, and so on and so forth, right? So there is another side of this business. Now, what that opens you up to is taking some additional deductions because of that, right? So maybe you have an office set up in your home like I do. You pay for internet. You use your phone to message your guests back and forth. All of these types of things do go into the category of taking deductions for your business. And of course, always consult your CPA or your accountant because it's going to depend on what your setup is. But I know I have a home office. I know that I primarily utilize my internet to help me with work stuff. If you're a Turo host, you know that we're getting messages all the time from our Turo guests. We're checking in our cars, we're checking them out. We have the utilization of our phones. So these are all things that you can take into account. Now, you can even take into account things like, let's say you're super busy with your Turo fleet and you have to hire a babysitter to watch your kids while you go do these rentals. Now, that can also be potentially utilized as a deduction. So I mention all of these things because I want you guys to jot them down and then inquire about them when you go to do your taxes. It's super important, right? Sometimes accountants are so busy during tax season that, they're not exactly in the freshest frame of mind to help you break down every little expense, right? So a lot of the stuff might just go under the radar and you might not capture it and you might not be able to take those deductions. So you really have to help direct the attention of your accountant, your CPA, to make sure that you are maximizing everything that you rightfully should get to do. So that's very important, is to work with your accountants to bring up these questions so that they can guide you on how best to take those deductions. And I'll leave you guys with one last one, which is the self-employment tax, right? Because we are independent contractors, we are technically self-employed, there is typically an average of a 15.3% self-employment tax, and you can oftentimes write off about 50% of that tax. So it's really interesting because you have to pay because you're self-employed, but the IRS does recognize that that is also an expense of being self-employed. So there is a deduction there as well, which is really confusing. But something you want to make sure is captured by your accountant. So hopefully this helps you guys out during tax season. Did my best to explain it as best as I understand it, but I am absolutely no tax professional. This is not my area of expertise, but it is an important one because remember, taxes are typically the greatest expense that you will have in your life, and it can be even greater depending on where you live. So you always want to make sure that you are operating and maximizing the tax deductions that you rightfully should get to take, and that you are running your business so that you can take those in accordance to the rules set by the IRS. So really important. Thank you so much for tuning in, everybody. If you like this video, make sure you hit that like button, and I look forward to talking to you guys in the comment section, and would love to hear what are some things that you guys are encountering when it comes to doing your Turo taxes. Take care, everyone. Bye.